Welcome to the Real Estate Investors Podcast. We interview awesome people from around the industry, helping to give you the resources you need to level up your business. Here's your host, Tyler Woodall.
Hey everybody, this is Tyler Woodall again, back with another episode of the Real Estate Investors Podcast. Today, I've got Joe, and we're just going to talk about a little bit of his experience and his background in the investing community. So, Joe, you want to kick us off? Tell us where you're from and what you focus on.
Hey, Tyler, thanks for having me on. I'm Joe Archbold. I'm based out of Naperville, Illinois, the suburbs of Chicago. I've been investing for about 10, 15 years. I think the first project I did was a fix and flip some time ago. And although it went well, we learned a lot of lessons. And through a connection that I had with a really, really good broker, I ended up migrating and shifting from wanting to do fix and flip and do multifamily. So for the last 10 years or so, I've been involved in acquiring and managing some of my own small multifamily stuff. So three unit, 4 unit kinds of assets that I own and actively manage.
Okay, that's awesome. I guess if you're managing them, they are in and around your area.
Yeah. So my goal was to try to keep them all within a proximity. And for me, they're within 3 zip codes. So
okay,
they're drivable, they're manageable. I got to a point where I was managing 30 doors on my own and ultimately realized I'd created another full-time job for myself.
Yeah.
So a little while back, I started to understand what a syndication looks like and was trying to figure out how could I participate in large multifamily and really make a leap from 30 units to 50 units to hear guys talking about hundreds of units. And most of that they do through syndications. There's a general partner, a passive investor that's the limited partner, and they'll go in and they'll combine forces to acquire an asset, whether it's an extremely large apartment complex or whatever, might be a mobile home park or a self-storage facility. And so that group, they'll acquire an asset, they'll bring a bunch of limited partners on to invest just purely passively in that investment. So as I started to understand that a little bit more, not only did I start to invest passively in syndications, but I went and I got my securities license so that I could participate and enable other people to invest this way as well.
Interesting. So you really went the whole 9 yards.
I've pushed in. I mean, for me in my market, I know my market well. I understand the dynamics. I understand, what assets look like in that market. But for me to engage in other markets, certainly through the Sun Belt, where people are just absolutely crushing it. The rents are through the roof. Businesses are moving there. People are moving there. So the growth is just, it's very interesting, and it provides a lot of opportunities. So rather than try to understand how I would grow and participate as an investor and try to build a team, understand the market and do all that stuff, when I can just rely on somebody who's already in that market, is experienced, they do very, very well there. Why wouldn't I just invest alongside them and let them provide a good risk-adjusted return back to me? And so that's kind of the crux of how I started and how I got into really pushing into the passive side as well.
That's awesome. So is that a bigger focus now? You're wanting to do more of the passive side?
It's a little bit of both. I mean, I think now the market dynamics are a little tricky for most markets and for a small investor. So if I'm looking at 3 and 4 unit, 6, 8 unit, even up to 20 unit buildings, it's kind of a mom and pop that we're still acquiring those from. And when I started, I could get these assets for $50K, $60K a door. And now you better be prepared to be in the $100 to $150K a door. And even in a smaller market, it's pretty expensive. And so I think it becomes pretty critical that you really know what you're doing and that you're really prepared to either be a buy and hold investor and really understand those opportunities, or most of these syndications are really like a 3 to 5 year hold, and it's really just a value add play where they acquire an asset, really go through a big kind of a flip process where they do a renovation, remodel, and they're out of that asset in 3 to 5 years. And, they've got a very, very good market dynamics and a strategy for very, very large assets. And because they're using leverage and because they've got a strategy in place, they're buying assets off market. It's not an auction, and they're not winning by paying the most. It's it becomes more appealing. It certainly does to me.
Right.
And, so
100% mitigate some of the risk that way too. So a lot of these opportunities that you are investing in, are they with the syndication groups where they are value adds? Is that most what you're doing? Okay.
Most are like the groups. So under a broker dealer, I'm considered what's called a broker dealer rep, and I have my securities license, very similar to what an insurance brokerage would have. But I took additional exams that really kind of focused it for real estate. The broker dealer, they work right directly with very, very large syndicators, and the syndicators come to the broker dealer for financing. So they need the down payment. They need the down payment as well as funds for capital expenditures for renovation. And so these groups utilize a syndicator utilize the broker dealer. What was I going to say? So these groups are very, very experienced in the markets they're in. They know the market. They're already there. They're engaged. They're already doing a ton of stuff already. So they've got a pretty good track record and history with the groups that are there. They're either doing their own property management, or they're already working with a group that's continuing to feed them more opportunities. So
love that. So for new people in the industry, how do you go about finding these groups? I know a lot of people, they meet them through conferences and stuff like that. Was it word of mouth? Was it networking?
Yeah. So, people can engage with a syndicator and go right directly to the syndicator sponsor and vet them themselves. And there's hundreds of them, right? There's maybe thousands of them that are continuing to try to acquire more assets as a GP and looking for investors to come in and invest with them. A group like ours, we've got pretty significant deal flow. We'll see 20 or 38 projects throughout the year, and we'll vet the opportunities ourselves. So we'll use a third-party independent financial analyst to review the sponsor's finances, to look at all of their due diligence, really look at their project. We'll do a background check on that sponsor, and then we'll physically go look at the site and kind of get the vision for what their project looks like, what they're trying to accomplish, and all that good stuff. So we get a really good understanding of that sponsor. Even if we've already done stuff with them in the past, we still go through that effort to ensure from a compliance perspective, we've got all that stuff buttoned up. And so the individual investor can go right directly to the sponsor. They could come to a group like ours. We do some of that legwork for them, and we'll show them opportunities in Phoenix, in Austin, in Florida, and throughout the Midwest, wherever our brokers or our syndicators have projects, they'll come to us, and we can enable an individual investor to look at those. So, and we'll see projects that are single assets. We'll see projects that are funds. So an asset we'll have a ton of information about that particular asset. Whereas a fund, they'll have a target asset that they're looking to acquire, and they will throughout the project acquire a bunch of other assets. And then they'll roll all those up under a fund and approach that as a fund to give the investor a little bit more diversification and a bigger time horizon.
That's awesome.
We'll also do stuff that's 506C as well as 506B for accredited investors and for non-accredited investors.
Okay, that's awesome. So as far as investments you have been a part of, are there any properties that were just super cool or great opportunities or neat stories that stick out when you think of past ones you've had the opportunity to get a swing at?
Yeah, so we've got a group in Arizona that just continues to build in Arizona, and it's hard not to talk about them. I think when we started with them, they were 300 or 400 million in assets under management, and now they're beyond $1 billion in assets under. I don't know if it's considered entirely under management. It may end up being under management, but they're selling a bunch of it off too. So they'll have $1 billion in transactions. and they just continue. They're like setting the market almost in Phoenix. And so they've done enough stuff there that when they go to acquire an asset, they know where the rents are. They know what work they need to do to bring that asset to a class where they're going to attract those rents. And that one's pretty interesting. But for me, being in the Midwest, a group that we worked with out of Michigan had some really, really unique similarities in that they were acquiring a bunch of smaller 20 and 30, 40, 100 unit size assets and merge them all together into a 900 unit plus kind of a fund. And for their perspective, it was a little bit of value add. And so it would seem traditional to us in that it fits that model, but their play wasn't really to escalate rents, to take rents from 800 to 1200 to 1400. Their market didn't really fit for that. Their play was to really attack all the expenses. Most of those smaller units had a mom and pop kind of a management that really wasn't seeing the economies of scale that they could provide when they brought them all under their umbrella and then could offer property management over the entire asset. So instead of really looking at their net operating income increase from rent increase, they really look at it as, some rent increase, but a bigger expense saving. So they're just a different play, but really, really interesting group.
That's awesome. So everybody's talking about, don't know what the market's going to be doing the next year, 2 years, et cetera. Obviously that's doom and gloom, but what do you think are some opportunities over the next couple of years on the near horizon that you're pursuing, or you think others should take a look at?
Yeah, that it's interesting. The market dynamics, I think, are such that people are starting to look at, I've heard people starting to look at more at mobile home parks. I think self-storage is going to continue to be interesting and unique. We do raise for a self-storage group, and they'll do a fund. And I think we've done 2 funds with them already, and there'll be a third that's going to come on probably towards the end of the year, whenever they launch their next one. But those are interesting assets. I still think that there's a lot of room for multifamily. The single family home construction is still a challenge. They have such a hard time in some of these hot markets to bring more stock on. So I think there's still going to be a shortage. And, the more we see between the Sun Belt and some of these areas, the median home prices have just gone through the roof. So first-time home buyers are extremely are going to continue to struggle to afford a home in those markets. So I even think that the value add multifamily is going to, at least the next 3 to 5 years, is going to still be very, very strong.
Right. No, that's great thinking. Because I'm just outside Greenville, South Carolina.
Oh, sure.
And so Greenville's getting listed on every top 10 list in America as far as places to live in, which is really making it difficult for the first time home buyers. I know a lot of people we've got moving in right now are New York, Texas, California, just paying the absurd cash offers.
Right. And so like my market, we see rent growth here in the Chicago suburbs, but it's pretty select. I think there's a lot of people that have migrated out of Illinois. South Carolina, you guys see a lot of in-migration. You guys have a lot of, business moving there as well. So it's the growth and the momentum for the southern states. It's really, really amazing.
Right. So
as an investor, if I can push money into those markets, I think that's a lot smarter than for me to try to figure out, how am I going to take on more opportunity and still be in my own bubble here? So.
Right. So is there anything over your 10 to 15 years of experience you would have done differently? I'm sure there's plenty, but are there any that just stick out?
Yeah, for me, I think it was really connecting with a good broker, a good realtor broker. And it took me a while to find that guy, right? And this guy, for me, he's an older guy, real go-getter, just a significant kind of a mentor friend, knows the market. He's in multifamily. He does property management. He's done all that stuff. So it just took me a long time to kind of find him, nurture that relationship, and really kind of get going for my own personal excuse me, for my own personal assets. And so had I gotten plugged in or really worked to try to understand that, my investing probably would have, I think I would have gotten further faster. But really at this point, I think the difference of looking at my time and saying, geez, if I've got capital deployed, do I really want to be active? I think there's so many people that want to be the general partner, or think that they want to own assets, or think that they want to do all that stuff. And it's really, really tricky if you're still running a W-2 job. Mm-hmm. The ability to take those same funds and deploy them with somebody that's an expert in their market and has the ability to return a good risk adjusted return for your investment, to me, just makes a lot of sense.
At what point should somebody start looking more heavily at opportunities like that, where they are more limited partner as far as, or not being hands-on?
Yeah, I think it's just about your time. I mean, I think at the end of the day, everybody wants to create more free time and less busy work. So for me, if there was a great asset and I could be involved in it, I know the kind of return I can get having done it this long in my market. And so if there was something that came out and I was, gosh, that's such an amazing deal, I may still want to participate in that. But if I could also just push that same funds to somebody in another market and really rely on somebody who's got a good track record, knows what they're doing, and has a really good strategy, and I can push funds to them and just collect a monthly check from them, that's great. I mean, at this point, we see more and more of these projects where people are investing, let's say $100,000, and they're returning almost 2x that money back in a 2 to 5 year span.
Yeah,
it's hard to beat. Plus, as a limited partner, you do participate as an owner, so you'll see significant tax advantage in being that limited partner as if you're an owner. So I think year one, we're seeing almost a 40 to 60% passive loss against your profits. So that carries over through the life of the project.
Right.
So, if you 2x your money, a good portion of that's going to be able to be written off in your taxes. Obviously, you got to check with your tax guy. And
right.
Stuff, but
that's awesome. Any tips there? Are there books you've read you've enjoyed, or you've just had a really awesome accountant that's mentored and coached through that?
That's always been a struggle for me. And I think that's personally on the tax side, I think it's because my wife's still W-2s, and, combining our taxes and really having somebody be a pro. Obviously for me, I manage all of my own personal assets, and that rolls up pretty conveniently into the tax guy. So that's pretty cut and dry. And I think more and more the passive side's even less complicated.
I get that. That's awesome. Well, any tips for somebody starting out, or any things you wish you'd have known or done differently?
Yeah. There's some good resources out there. I think Bigger Pockets is a pretty good resource for people. If they haven't been out on Bigger Pockets, that's pretty good. And honestly, I think there's more and more guys now that are posting and publishing a lot of really good content on LinkedIn.
Yep. I think LinkedIn is really neat and underrated. I spend a lot of time on there.
Yeah, I think there's a lot of free information there, and guys can post a little bit freer than they can on some of the other outlets. So right. I'm there quite a bit and post as much as I can there.
That's awesome. Okay, cool. Well, man, I really appreciate you taking some time to talk with me today. I hope everybody was able to get some value out of this. Guys, if you're not looking into syndication opportunities, I think you may be missing the boat there, because like Joe's talking about, if you can find a way to keep your time and still create a good return on your investment, I think that's the ticket there, because you don't need more headaches in life.
Yeah. Well, it's crazy. You're absolutely right, Tyler. The more people I talk to that think that they want to be involved in real estate, at the end of the day, they're just creating more work for themselves. And it's the people that I talk to that have just gone and bought one single family unit and had a problem with a tenant, and now they'll never invest in real estate again. And they miss the opportunity to, be a little more diversified, spread the money out, and to, rely on somebody who's already doing it in a market that really knows what they're doing. So.
Right. 100%. Well, I appreciate it. If there's ever anything I can do to help, let me know. Everybody, we appreciate y'all listening today. Joe, is there any good way for them to reach out to you? Is email best? I know you mentioned LinkedIn.
Yeah, I can be reached at my websites, antheminvesting.com. If you want to ask some questions or reach out to me, you can reach me at un-limitedpartner.com as well.
Okay. Is there anything that the community can do for you? Obviously, I know possibly working with you may be an option. What would that look like?
Yeah, absolutely. If anybody has any questions or wanted to reach out to understand a little bit more what a syndication looks like, what being a limited partner means, just how that whole process looks, how to engage, and what it would look like to kind of take some steps towards becoming a passive investor, reach out. I'd be really glad to, share as much information, any of my resources, or any advice that I can.
That's awesome. Perfect. Well, thanks everybody. Hope y'all have a great day. Talk
Hey,
soon.
Tyler, thanks for your time, man. Appreciate it.